Hi, I'm Daryl Jones, Director of Research at Hedgeye Risk Management. I'm joined by my colleague Christian Drake, who covers the U.S. economy for us. And today we're going to talk a little bit about consumer spending. Consumer spending is about 70% of the U.S. GDP and a very important part, or very important driver in our economic models. Yesterday we got the PCE data, which had some important insights in terms of our view of GDP going forward. So with that, Christian, give us a little color on the PCE data.
Sure. So if you don't know, PCE is the consumer spending data.
Yep.
We got the January update yesterday. What I wanted to highlight was the durable goods data, and more specifically, spending on luxury items. So if we go to the chart here, and what you want to be looking at is the red line there in the chart, and more specifically, the ramp that you see in the red line there in the back half of 2013.
Yep.
So luxury items, and this is our own composite index. What we did was we built an index looking at spending on things like luxury boats, pleasure boats,
Yep.
aircraft, jewelry, watches, and whatnot.
So high ticket discretionary type items.
Right.
Yep.
And what you'll see, pretty discreetly is that ramp there in the back half of 2013.
Yep.
And then on the other side of that, what's notable now is you see that red line completely collapsing now as we move into the.
So what do you think is impacting the consumer and their spending on these bigger ticket items? I mean, we talk a lot about inflation. Do you think they're starting to see inflationary pressures in other areas that they're spending?
It's probably less of an impact at the high end, but
Yep.
what I would notice is, or what I would point out is that in the back half of 2013, that coincided almost perfectly with peak gains in equities,
Okay.
peak gains in home price acceleration. So as you see stock prices start to slow, I think we're at up 0% year to date. We've had 3 straight months of deceleration in home prices, so you may see the high-end consumer pull back alongside the slowdown
So
there.
effectively, as your home price increases, as your stock portfolio increases, you get more confident, you spend more, but when those increases decline, you probably spend less.
Yep, and the wealth effect starts to ebb.
So then I guess, how do we take this data and think prospectively? We've been more bearish on growth this year than a lot of people, but what do we do from here? I mean, some of this is priced into the market, but is this still a negative forward-looking indicator for you?
I think so. I think the main takeaway here is that if the high end was the marginal driver of consumption growth last year,
Yep.
and that's not the case this year, wages are still stagnant for the bottom 80%. Upside for consumption looking forward is pretty constrained here.
Okay. So, once again, with Christian Drake, who covers the U.S. economy for us, PCE data came out yesterday. Still pretty cautious on U.S. consumption spending based on that data. As we look forward, big concern for us is inflation ramping. We're definitely getting that in commodity costs. So we're still pretty cautious overall on economic growth in the U.S. If you have any questions for me, you can tweet me at HedgeyeDJ or tweet Christian at HedgeyeUSA. Thanks.